All right, let's get to the charts that matter today. Tony Sycamore from IG joins me now. Hey, Tony, thanks for joining us. Record heights yet again for U.S. markets. Momentum is a beautiful thing, isn't it?
It's a wonderful thing, and it's just a frenzy out there at the moment for tech stocks. What you'll notice is at the end of this week, the Nasdaq and the S&P 500 have had a great week, but the ASX 200, the Chinese-related stock markets, Japan, they're all trading lower. So everything is getting thrown out of the way as the market continues to chase these technology stocks. And what you can see here is the Nasdaq broke above this trendline resistance, which I thought would probably hold, but it just went straight through there like a hot knife through butter. And I guess the question now is what happens? Potentially we see a little bit of squaring up into the weekend, but I can't see any reason why this overbought, this melt up doesn't continue into this 20,000 area. So a little bit of profit taking potentially into the weekend, but I can't see any reason why it just doesn't continue into the end of this month.
Yeah, well, let's bring up the chart for the S&P ASX 200, the XJO. Because, your point to China is a good one. But, even today, it's disappointing how weak this market is in context.
Yeah, I think these thematics are looking at the ASX 200 and thinking this index is more exposed to China than what it is to the Nasdaq. And I think I made the point earlier in the week, there's been a couple of huge selling orders hit the market out of the blue, starting in March from that 78.53 high. And we've seen it regularly every month since then. So to me, somebody is getting out of their Aussie exposure or potentially using shorts in the ASX 200 to fund longs elsewhere. It makes perfect sense to me. You look at China, you've got subpar growth, you've got still potentially a deflationary spiral over there. And of course, trade tensions are only going one way. As you mentioned, EV vehicles seem to be the latest battleground there.
Okay, so when we look at this chart, what's it telling us? And you put today on top of it, about where we're headed likely.
Yeah, well, it's telling us we're going sideways. It tried to pop up towards that 7,900 again. And we are in the final month of the financial year. So I don't expect any great moves to occur. It is all about just squaring up, tax loss selling. It is potentially playing out, as we mentioned, this thematic in terms of this big offshore seller, which I think has been pretty active because of the reasons we outlined. But I need the ASX 200 to get above that trendline resistance, up around 7,900 to 7,910, and that would give us the green light for 8,000. Until then, we probably trade back down towards that 7,600 area, and below that, well, you've got the 200-day moving average coming in around at 7,400-ish.
Today, we do have the Bank of Japan. How's the yen trading into this meeting?
It is trading fairly well offered, actually. It's a common theme for the yen at the moment. The buoyancy in that dollar-yen cross rate, to me, suggests that the BOJ are going to do something today. Yes, they'll keep the target rate unchanged, but I expect to see a tapering of their JGB bond purchases from about 6 trillion down to 5 trillion per month. That's in yen, of course. And I think what that'll do is it'll take JGB 10-year yields up towards 1.1%. And I think it sees dollar yen trade back down towards that 155.50 area. You can see there is some good uptrend support coming from that 140.25 low. I don't think it's going to stay down there. I think it's just basically letting a little bit of pressure out of the tires, if you like. But the problem with dollar yen is, of course, that the Fed were hawkish, and that probably continues to play out until we see inflation. We've had one good month of data, there's no doubt about that, but they want to see 3 or 4 months of data. So that unfortunately keeps dollar yen bid, which the BOJ has to counter today, I believe.
Yeah, all right. So now let's talk about gold. Do you think that there's support for gold? Is it still in an uptrend in your view, even though we have had a few wobbles this week?
Yep, a very well-defined range here, 24.50 the top of the range. And, of course, this 22.77 to 22.86 support area is the bottom of the range. How we evolve from here, I think it's a pretty good setup. If you like the idea of gold going higher from here, you know where you're wrong. You're wrong if you see a sustained break below, let's say 22.70-ish. It probably means you're heading back to 2,200, possibly back towards 21.50. So that's something if you're looking for a short trade. If you favour longs, you're looking for gold to remain above this support area, and then it can retest that 24.50 high. So It just depends on your view here at the moment. To me, it looks a little bit tight. I'd like to see a little bit of a flush. It does feel like that time of the year where we're getting position flushes. Of course, Northern Hemisphere summer, we start to see liquidity dry up a little bit. But whether it continues on down towards 2150, that's a different story. I mean, you can see these flushes and they quickly unravel as well.
Just very, very quickly, Bitcoin, are you still a believer that we're in a correction in a bull market?
Concerning, Nadine, the price action to me, everything is going right for Bitcoin. The risk appetite, i.e. the Nasdaq, is supportive of Bitcoin. The ETF flows are supportive of Bitcoin, but the price action suggests otherwise. I need to see Bitcoin hold above that uptrend support coming from that 38,505 low. If it fails to break that, then potentially we're going to see continuation of the corrective price action. But you can see the spring is coiling there, and I think we're coming very, very close to either a break lower below that trendline support, or we push up above 74,000 and head up towards 80,000 blue sky.
Okie dokie. Hey, Tony, always nice to see you before the weekend. Thanks so much for joining us and getting us across those key charts to watch.